Japanese yen is taking off, Pete. Huge run up.
Just like your car in that 5-way intersection.
Huge
crazy
move.
man came out of nowhere.
Huge move higher in the Japanese yen over the course of the last, at this point, few weeks. We'll look at all the data.
Right.
But dollar yen back under 150. Want to go through all the ideas here because you have such great historical experience around this market being a safe haven or flight to quality, which it hasn't been.
No.
If you've been a trader in the last, really, let's call it 3 to 5 years here, has not been a safe haven. Starting to look a little bit like it, but let's dive into all the dynamics here for the Japanese yen. As you can see, we have the daily chart up, and I also have Bank of Japan interest rates down there, which we'll take a look at in a second. But from the start, here's the start of the year, if you can see my mouse. And we started the year well above 155, and it's been a pretty consistent trend lower to just recently, the last couple of trading sessions, trading under 150. Pete, there's always a bunch of reasons for an event like this. I always talk about my theory for whenever you see a big move in the market, something that's not just like sideways noise of like, oh, it was up 100 points last week and now it's down 50 points and like we didn't really go anywhere.
Right.
But here, you have a move of 500 plus points over the last couple of weeks. It's always multiple things. It's never like, oh, that thing changed and so the market moved to a huge price extreme. What for you has been the main story in this yen market in 2025?
I think a little bit of the interest rate story. I think there is a little safe haven story in here. The inflation story. Their inflation numbers printed 4%.
They're moving higher.
Yeah.
Which is a good thing for Japan?
It is, because supposedly they were in this just protracted period of very, very low inflation. So they've got, again, interest rates at 50 basis points, and they've got 4% inflation. Now, we have 2.8% inflation. Pick a number. It's anywhere between 2.5 and 3, depending on the metric you pick. But our rates are closer to 4.5%. So a little bit of disconnect there. So I think we're seeing a little bit of that idea. Do we finally see the long-awaited normalization in rates? And I mean, we've seen them move in a very measured fashion.
Yeah.
But
In the right
think
direction.
about that. A measured fashion from 150 means a lot. Is a lot different than a measured fashion from if dollar yen were at 110.
Which we'll get to the historical prices in a second, which is much more normal. And so, and to your point, a nice move higher in interest rates from negative is a lot different than a nice move higher in interest rates from 0 or 25 bips or 50 bips, which is where most central banks started a few years ago. And I'm glad you brought in the inflation piece, because it is, for the sake of this conversation, inflation over the last couple of years is kind of synonymous with growth for a region. And if you remember, all along the pandemic recovery, U.S. inflation got up to 8-9%. Euro area and UK inflation got up to, I think, maybe 6-7%, whatever it was. But it also came along with great growth in U.S. business, UK business, European business, what have you. And you just didn't see that kind of recovery in Japan. You didn't see it in China and Australia, certain areas like that. Now you are seeing inflation higher than 2%, which is, of course, if you read an economics book, you don't want 4% inflation theoretically, but this is the first time Japanese inflation has been higher than that 2% measure that central banks are looking for in years. And it's been consistently up there, and they've been able to raise interest rates out of negative, but now to 50 bips, which even a handful of months ago, people didn't think that they would get up to 50 bips. And now the Bank of Japan is thinking about even more hikes. And that's why I think we've moved now below 150. But to your point, I do want to get the historical prices in here, Pete. Here's the monthly chart going all the way back to 1991. And you can see we are pretty much just coming off of the highest prices or the lowest prices for yen in the last 30 years. And so you have to take that context in there. But I do pose this question to you. Does it seem like that dollar-yen carry trade might be over? Because in June of, I believe it was, 2024, last year, this market got up to 160. Right. Okay, dollar yen. So for every dollar, you're getting 160 yen, which you have not been able to get that price point, like I say, in the last 30 years. When it was up there, the gap between U.S. and Japanese interest rates was 5.5%, 5.4%. Now it's 4%, still pretty wide gap. But if the U.S. is expected to come low, there's no expectation for the U.S. to go higher. Right. They're expected to come lower. That pace of at which they come lower is maybe slower than we thought.
Lower. Where Japan is here or higher.
So does that carry trade feel like it? We had the story about a year or two ago where the market got down to close to 140 here, and everybody was like, the carry trade's over. The carry trade's over. The carry trade has stayed for the last year. Does it feel like we might finally be kind of closing that gap in that carry trade where people have been long dollar at 4 or 5% and short yen at 0% is starting to end a little bit?
Yeah, I think that's one of the contributing factors to it, and the economy in Japan is cooperating for a change in that divergence. Yeah. So, yeah, absolutely. I remember the levels we're at. So, yeah, I remember trading yen at 80, 81, and
double digits.
Still being long at 78, and those were painful days.
I'm sure. I mean, we spent years in the 2010s there below 90.
No, and this is where the Bank of Japan would just come in, and they would buy dollar yen and just in massive waves. They'd run the market. I
remember
and
that.
The minute they'd stop,
everybody would sell into it.
Everyone would just sell into it.
It was crazy.
That's when, any time now, a central bank intervenes. It's like, they've drawn an imaginary line in the sand until they let it go through. So I do think we're at a point where the rate of change is different in the two countries, and the rate of change is is seeming like it's more real to take place, and that will continue to put some stress on dollar yen right now.
The timing piece is the only piece that's still up for grabs. Right. Will it get down to 3% or 2%, a gap between the two this year? Right. Or will it be, if it's next year, then this market might stay in that 140 to 160 range. But I do want to cover one last thing, because you did talk a little bit about the flight to quality. Here's the correlation, the rolling correlation of yen to VIX for the last, what do we got data for? 15 or so years. And you can see for stretches from 2012 until 2020, really up until that pandemic that kind of changed everything for the dynamic for trades like this, really strong positive correlation. That is, when the stock market would move lower, there would be a flight to quality and VIX would move higher, the yen would catch a bid as well. You see, since the pandemic, it's been on both sides. It's been actually red sometimes, green sometimes, not as strong. But in the most recent last couple of months here, you can see pretty consistently green. It's not the strongest it's ever been, but you're starting to see that flight to quality back in the market.
Yeah, it'll be interesting. And again, the story was always that Japan, for many years, the largest holder of U.S. Treasuries, had investments around the globe. In times of stress, they will take those foreign assets, convert them back into domestic currency, and repatriate them home for protection, causing a natural updraft in yen or selling in dollar yen. It's a good story. How often it worked for a while.
Not so much recently, but we'll see if that relationship starts to get back.
I think this is really, and it was almost when you started to see SPOOs started to get hit early in the day and then continue and stuff like that. You always had some long yen on, and I would say, you'd see guys walk by the yen pit who hadn't been there in months, buy 20 yen. Just everybody was just putting that little bit of contra-cyclical hedge on.
Sure.
When did work well for you in the last 3-4 years?
Yeah, it's been more of an interest rate story recently, and that's what we've seen the last couple of weeks. We'll continue to watch that yen market and where these stories go. Thanks so much for watching here today